into whether or not they're going to cut rates here in the next couple of weeks. I want to go to this first clip, because this clip will get into Chamath Palihapitiya talking about how the government is weaponizing these employers. Take a look.
Moving these things around and firing people like this, and the weaponization of the government against government workers, as some people are claiming. That was the sort of other
Why
piece.
do you have to use the word weaponization? Like, when you appoint somebody to the Commerce Department or to Treasury, is that weaponizing that? No, it's a political appointee.
Yeah, no. The concern people have is that this, that the head of FHFA is the one who is researching, her mortgages, and that felt like lawfare to people.
The more important issue for me is just acknowledging these people are political appointees. These are partisan employees. And this idea that the Fed is independent is maybe something that we should revisit, because most of the things that they do can be done by Treasury and other people better.
All right, so you can see there is a lot of conjecture, I think, coming in right now what the Fed's role really is, because it is starting to look at data that is already dated. We're starting to see all these job numbers are getting revised. I'll go to that in a minute. And the issue that all of these bureaucrats, yes, they're all public appointees by a government, and I think that is, and I would agree with Chamath on that point, is that it is a political position. All of these are political positions, so you anticipate you're going to get political response, and that's what has been going on right now with the Fed. If you look at the poly market on the decision for September, you can kind of see it's now rising up to around 86% on a quarter basis points being the Fed rate cut. And of course, I think the one thing to watch right here is the fact that we are starting to see for the first time a little bit of movement right there on the 50 basis points, now hovering at around 6.4%. That's pretty insane that this is even on the table. Granted, I believe that the Fed is way too late. This is something that should have been done months ago, probably as far back as 6 months ago. July was really my target zone of where we should have seen a major cut. But that, of course, did not happen. And of course, with that, this is what's going on. In 13 days, the Fed will cut rates and blame a weaker labor market. These labor markets don't just happen, okay? They're accruing over time. And then also all core CPI inflation has risen now back above 3 and now is 110 basis points above the 2% target. This is the worst thing that could happen for Chair Powell. And that is rising inflation and rising unemployment. That is stagflation in its definition. It is the problem that the Fed will run into. And what's going to go from there, of course, is going to be money printing. And what you've got here is the issue around the jobs themselves. In 5 days, the BLS is set to revise job numbers for the 12 months ending in March 2025. Now, I want you to think about this, guys. The downward revision is up to 950,000 jobs. This is a absolute, I don't even know what to call this, because the amount, how can they not get this stuff right? Being able to see this job, freight train coming at us for the amount of time that we've had, and that the Fed is not being able to at least understand where the job market is. I mean, isn't that the role of what their analysis is on all this data? I think this is where it is now finally out in the open, and we're starting to see some very unusual things. All right, so let's jump over to the Beige Book. This, of course, is a report that the Fed puts out a few times a year. It basically analyzes where the money expenditure is going for Americans. And this is the kind of thing that they're running into. And this is, of course, looking at where money is being spent. So 38% right now withdrawn from retirement funds. Gen Z is withdrawn from retirement funds. This is showing people having to dive into their savings because of what we're seeing right now with inflation. If you look at the idea around this, 25 to 28% of U.S. consumers now are going into groceries, obvious, housing-related costs, paying off debts, rising living costs, all those kind of things. These are typical things, but the point is they look back on this data and see these rising costs, and this is the problem that we are dealing with right now, is unfortunately going to be a very hot inflation market. I am concerned that this could get into hyperinflation, and again, this could have been evolved and eventually avoided by just simply looking at rate cuts much earlier in the year. and dealing with this. Right now, what we're dealing with is how do you make money with all this new data? Here's a clip. Maybe you'll understand.
Yesterday's Beige Book was a real eye-opener for me. Really a weak report. It wasn't quite the report we've seen ahead of recessions, but it was spoke of an economy that's really at stall speed right now. There was no hiring going on, no growth, very limited consumer spending. Year to date, ADP is reporting 587,000 jobs with only a couple of little revisions. The government's reporting 597,000 jobs with massive revisions. Over a 12-month period, ADP and the BLS, the difference is 82,000. So my point is that this data series has done,
and it's right, and it's better than government numbers.
I don't know how to make money with it. That's the problem, because the mousetrap that you want to invent is the one that predicts the wrong number that will be reported by the BLS. This doesn't do that. So if somebody out there knows how to make money with a more accurate number, I don't know how to do that, but I just know if you want an idea of what's going on in the job market, I don't think you can afford to miss this data. I'm not saying it's the be-all and end-all. It's 20%. It's actual data, not estimate.
Right.
But we track it, and it's at one of the lowest right now differences over a 3-month absolute average that we've seen in quite a while. And then the Challenger report this morning, layoffs up 39%, adding pharmaceuticals and finance to the sectors that we're seeing layoffs. So
Steve, have you seen it?
I ended up with more concern about the economy after yesterday's data and this morning's Challenger.
Is there anything to...
All right, so this is something that we have been talking about for a long time, and that is the evolution of where the job market will put pressure on the economy because it is organized around small business. And that's what's happening right now. We're seeing just ridiculous job adjustments. This is the problem that they're talking about, is the fact that layoffs at only 39%. I think there's a lot more either in the pipeline or coming. And that is the problem that the Fed cannot get away from. And this is the problem that I think we're facing right now. There's a clip here that Chamath hits on around the Fed's role and kind of the whole controversy, because it all starts with the data, the validity of the Fed, all that. Let's play that.
Do they actually create monetary policy and price stability? I would say that the capital markets and the free markets actually do a better job of that. They define much more what the spread is. I think SOFR is a much better rate mechanism than the Fed funds rate at this point. Do they do banking supervision and regulation? Yeah, they probably do a reasonably good job of that. That is probably something that most people would say they could continue to do. Do they do a good job as a payment system and a clearinghouse? Again, probably something that's pretty uncontroversial that they could continue to do. So I guess my point is, Jason, the bigger picture is the two things that are the most dynamic, they are the worst at doing. And so I would actually question whether that responsibility should sit with a handful of humans looking at faulty month-old data. So for example, today, the Commerce Department did something that was pretty exceptional. They said, we're going to start publishing data to the blockchain. All the GDP data is now going into a blockchain. So can you imagine what this starts? I think, and we've talked about this before, I think employment data from all these employment companies and payroll companies should get published this way. GDP data can get published this way. All kinds of economic measures, scrubbed for anonymity, should get published so that you can have pricing oracles that actually tell you what's happening in real time. And the markets will then react and set rates in real time. Those are the two most sensitive things that I think the Fed does that creates controversy that they shouldn't be doing anymore.
I think Chamath is dead on this point, and I think the good news is that publishing data on the blockchain, first of all, that's going to open it up, and it also will become real time. I do agree that if you were to open this up to the major payroll sectors, the ADPs, the Gustos of the world, all that at least tracks that data in real time, the opportunity here is going to be real-time information, but then you kind of wonder what would be the purpose of the Fed. To his point, the two things that they're really designed to be around, they're doing the worst job at, and that, I think, starts to flow over into the whole theory of possibly ending the Fed. I know this is a crazy statement, but the point is we are now too late again. It will take months of corrective behavior by the Fed to be able to just get the economy back in, which simply means more printing, all of that. I mean, it's good for, I would say it's good for assets because people will understand the debasement of the dollar very quickly. And that's, I think, what we're going to deal with right now is the real question is whether or not we see hyperinflation. All right, before we go over to the next segment, I do want to thank our sponsor, and that's Gemini. You guys can go out there and get your credit card because you're going to need it. And this is the way you can do it. Go over to Gemini.com/XRP. You can actually get this card right here. It's the XRP edition. And the cool thing here is if you spend up to $3,000 over a period of time, you can get up to $200 back in whatever crypto you want, and you get 4% back on whichever crypto you want as well. So if you want back on XRP, ETH, Bitcoin, Solana, it doesn't matter. You can sit there and toggle it in your credit card app. Very easy and very cool to use. I love it. Check the link down below. It does help the channel. All right, I want to lead off this next segment with a clip that is going into, are the markets in a sweet spot? Are we in a position right now where after a Fed adjustment, which it's got to happen now with this jobs data, I think this is a slam dunk in 2 weeks, what happens to the market? Here's Mark Newton. This is one of the fund strat guys that Tom Lee kind of pays attention to. Take a look.
Trends are fine. I think the economy is sort of in a sweet spot where you have everybody sort of wondering what the Fed's going to do and how many cuts are built into the curve. And meanwhile, the economy is not necessarily falling off a cliff. So 4 cuts between now and next summer, and trends are intact, and earnings growth is great, and the Fed is dovish. I mean, sign me up. I'll be a buyer of any dip.
Well, one data point I always gravitate towards is the $7 trillion in money market funds right now that are earning $500 billion in annual dividends. So that's even more dry powder once the consumer comes in and says, hey, we can put more to work in the market.
Well, I would agree with that. You can put more to work in the market, and I think the key here is going to be the debasement angle on all of this. If you look at money market funds balances right now, they've doubled since 2020. Even though the stock market has continued to soar, that simply means we still have a lot of cash on the sideline. And it's mostly conservative cash. I think we're looking at people who are very cautious. So I question whether or not they will enter the crypto market, but there will be a certain sector of that will be ready for risk assets because they'll be able to create, unlimited wealth, I think. That is a factor that will play into this market, especially as we start to see Fed rate cuts heat up and inflation, mark my word, will continue to rise. This is something that the lagging data is going to occur on. The problems with the job numbers are a critical mass effect that starts to affect a lot of businesses, and that will increase cost, and that's the problem that you're dealing with right now. All right, let me go to this real quick. This is just showing the how companies are utilizing Treasury to be able to kind of go against the debasement side of this. And this is corporate Bitcoin holdings, over 1 million Bitcoin, now 111 billion locked up by institutions. This continues to grow. I think we're going to just see a continued upward trend here. And I think it will also flow over into Ethereum and a handful of other assets that will play into this market, especially as we start to see Bitcoin go above 120 again. So be on the lookout for all this, guys. This is a very intriguing situation. Ethereum's monthly spot volume tops Bitcoin trading on centralized exchanges. This is for the first time in 7 years. So why is that? Well, if you look at the performance that we've seen, first time in 7 years, spot trading volume, centralized exchanges now surpassing Bitcoin. But if you look at the data right here, ETH surged over 105% year to date. Well, that's the winner. Bitcoin is up around 18% same period. So that's why we're seeing the activity. Obviously, ETH trading at around 44 to 45. I anticipate we're going to continue to see aggressive movement on a lot of these upper class tokenized opportunities out there in the market, especially around ETH, Bitcoin, and Solana, along maybe with a handful of others as well. Peter Thiel and Michael Saylor now are going head to head. Who's making the smarter crypto treasury bet? Well, there's a couple angles that you can go into. Remember, Saylor is the Bitcoin king. And if you look at this on where Thiel's position is, he views ETH as a programmable capital, sort of a fuel for applications, smart contracts, tokenized markets, and really it's the Wall Street token. I mean, that's something that everybody's kind of locked in on. Saylor's Bitcoin locked away, strategy, balance sheet, immovable, except through future asset sales. So his strategy is different. Thiel is going at it more on can this exit or expand positions by shifting equity stakes in ETH treasury firms. That's a possibility. That flexibility, of course, he's talking about exposure, more dynamic, but also riskier, and I would agree with that. But the key here is whether or not Bitcoin and Saylor's conviction versus Thiel's function about and around innovation. And I would say that both win. The question is which one wins more? And I think it's going to be Ethereum only because of the fact that we have not seen the application layer of ETH really move into the markets just yet. Sure, Wall Street's getting there. There's a lot of tokenized securities starting to come. We're going to see, of course, stablecoins just explode. And I think the $100 trillion market for crypto is within reach. And is it a 5-year run? Is it a 7-year, 8-year run? I don't know, but I think when you look at all the different categories of where markets are being manipulated by, crypto is just now getting going between 3 and 4 trillion. That is huge, and I think ETH, Bitcoin, and a handful of others will lead the way. All right, so where you guys can see this going is good news for, I think, risk markets. The Fed's going to cut. The question is, it's going to get a little rocky. Get ready for things happening next week. Trump's going to take a stab at him, so look for some volatility there and play the markets according to that. And of course, as I said, if you're not in the Diamond Circle, get in right now. It's a great place to get additional content from us. Follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show. Let's dive into it. Today, we're going to look at what's going on in DC as we gear up for a very heated season on blockchain regulation. We'll break it down for you. My name is Paul Barron. Welcome back into the show. I do want to thank our sponsor today. That is Coinbase, a place where you guys can get going on your crypto journey. Just jump over to Coinbase.com. Future of money is here. Whether you're a business or an individual, you can participate right there on Coinbase.com. A lot of opportunities there as well. If you don't have the companion app, which is the Base app, download that as well. You'll learn a little bit about self-custody. You'll learn a little bit more about what Coinbase is doing as a chain on Base. And of course, use our link. It does help us out. You can get up to $200 in crypto just by making your first trade. So check that out. Listen, we wanted to bring Ron Hammond back in, who has been a very successful lobbyist for the crypto industry and continues his efforts over at Wintermute. So Ron, how are you? Nice to see you again.
Nice to see you as well, Paul. I'm doing pretty good. It's a little hectic, and it's just starting, so
no
really
kidding. Hey, listen, I was looking at your tweet right here. Congress, this week in Congress crypto, this is the last quiet week. This is it. No more quietness. We're going to see a lot more happening. What do you think is the first thing we'll start to see Congress address right now as they return?
Well, they got plenty on their plate right now. I mean, obviously, since Congress left to go back to their districts at the beginning of August, again, that's typical for every single Congress every single year. They go back and campaign in their districts or go talk to their voters. We saw the D.C. National Guard come in into that situation. There's a lot of talks about a possible shutdown now at the end of September. So that's going to be taking up a lot of time this upcoming month. And then at least in the crypto space, we're really looking forward to seeing what the next draft is for the market structure bill. Because for those who don't maybe recall, the Senate is now going to be doing their own version of market structure. They're not going to be taking, at least right now, the Clarity Act, which passed out of the House just a few months ago on a very significant bipartisan basis, over 2/3 of Congress, at least the House. It seemed that the Senate is going on their own product, and they said they should have a draft sometime mid to late September. It could get pushed with the shutdown, but right now, all eyes, at least in the lobbying world and policy world of crypto, are very focused on what's happening with the market structure draft and what the text says, because it's very important and will have legs. We'll have to see.
Why did the Senate decide to go that direction as opposed to just taking the lead from the House?
You know, we've seen this happen before. Actually, we saw this with this Genius Act, the stablecoin bill, where the House had their own version, the Stable Act. The Senate had the Genius Act. And at the end of the day, the Genius Act won out, even though the House was moving forward a tad faster in the early part of the year. You know, some of that is more, there's a lot of politics involved, obviously, and there's a lot of pride of ownership here. There's some folks in the Senate on both sides of the aisle who are in the drafting stages saying, hey, I actually think we can do better on this definition, for example, like ancillary assets, or we can do better on decentralization tests, for example. So there's a plethora of different views. The Senate has been a little farther behind, I would say, on market structure topics usually. The House has been working on this for nearly 8 years now and having hearings on this, whereas the Senate's about 5 or 6 years. But the first, really big push for hearings was starting this year when the Republicans took the Senate back over. So we will see what happens on this front here, but at least right now, we've seen a lot of this happen, not just in crypto, where the House passes just a bill and then the Senate says, that's cute, but guess what? We're going to be doing our own version, because in their mind, and this is true, they have a 60-vote threshold, whereas the House is simple majority. So we will see what happens, who wins out here, but at least right now, the Senate seems to be all for going on their own path and then telling the House, vote on our version if and when it passes.
What would be the timeline on that, do you feel? A healthy timeline, would it be towards the end of the session, or could it be happening in the front end of the session?
I'd say, the shutdown does bring a lot of, dynamics into play here, but I would say probably October, late October, early November, we could probably see the full Senate voting on this. Again, remember, we have to go through committee process, so we still have to go through the committee. Then the committees have to vote on it. We have to go through the Agriculture Committee, and they have to vote on it. Then they get the full Senate. So I'd say out of the Senate, hopefully, late October, mid-October to November, and then it would go to the House. And the hope is to have the House push forward and move it forward by hopefully before Christmas. Usually there's a lot of bills that get done right before Christmas timeframe. So we'll see if it gets thrown into that big package, or maybe time will tell that it gets more delayed and it gets more into 2026, which is a place we don't really want to be. So a lot of things up in the air right now, but we're still pretty optimistic. Late fall, probably things are going to be moving a lot faster.
The Poly Market on Clarity Act signed into law this year, hovering at around 40%. Would you give it that much right now, or would you go higher?
I still go a little higher. It seems that we have pretty good bipartisan buy-in right now. We have Lisa Blunt Rochester on the Democrat side, Kristen Gillibrand as well. We even seen Amy Klobuchar from the Senate Ag Committee saying that she wants to work with the Republicans on crafting their version of market structure.
Okay.
So the upside is that we do have the key players and key senior players in the Democrat Party open to this. So now, mind you, we have Elizabeth Warren, who's the key Democratic player against this, but we've seen her lose out several times already on crypto votes and other votes this year. So time will tell. Exactly, again, the product is really important what comes out, but at least right now, on the political side, the right people are talking.
Yeah. Some other news this week, Ondo launching tokenized stocks and ETFs. So this is going. You've got the CFTC and the SEC also coming out with their own interpretation of how this might play into the markets, which is kind of going ahead of what Congress has been able to do, because there hasn't been framework on this yet. Is this a process that you see continuing, or do you think Congress is going to try to get in the middle of this?
At least right now, this seems to be more of a regulatory fight, but this is going to be a theme for quite some time. So for those who aren't really catching up, a lot of these comments on tokenized securities or tokenized equities, they're more focused on the SEC. The SEC put out a request for information back in February saying, hey, we have a plethora of topics, including tokenized equities. Please give us your thoughts. So actually today, we responded and have plenty of thoughts when it comes to the tokenized equity side, and saying that, hey, we think the market's ripe. This is the time to do it. We just need clear rules, especially for being based in the UK. We do need very, very clear rules to operate in the United States as we launch our entity. But overall, we've seen some folks on the negative side here. We've seen Citadel, for example, go really heavily saying we do not think the market's ready for tokenized equities. We've seen the Trade Association, SIFMA, actually taking their arguments as well. We also saw there's an exchange, a trade association as well, that said EU as well as the US should stop tokenized equities for now and more study the issue. So we're seeing TradFi now playing up these regulatory barriers or hurdles, you could say, whereas crypto and a lot of the other fintech folks are saying, hey, no, we're ready to go. So this is going to be a battle happening for quite some time, but we're seeing TradFi very uncharacteristically step out in the line of fire and saying, hey, no, we do not want this, at least right now, we're not ready for it. And this is going to be a theme going forward for the next several years as these regulatory battles play out.
Why do you think that that is the case? I mean, obviously, it's the known elements of why they may not necessarily want this to occur, because this would really kind of level the playing field. But is there something else that you see kind of brewing underneath this that would cause more people to come out against it?
Not necessarily. For years, most of the TradFi players, at least in DC, really didn't give two cares about crypto policy. They were focused on many other issues that are way more important for them. And obviously, the theme for a while was that crypto was going to come for TradFi eventually. We're kind of at that moment now, and we're seeing at least TradFi really change their tactics now and being very aggressive. And again, I point to the Citadel letter as kind of the first gun here, as saying that they're being pretty aggressive on this front. And we've seen Commissioner Purse of the SEC say, hey, we're going to have some stuff coming out, quote, soon when it comes to tokenized equities. We don't really know what that means. It could be rulemaking, it could be guidance, but it seems like something is coming in the near future. And that's very nice to hear on the transparency side of things. And that's probably why Citadel was really aggressive in their letter. But again, us at Wintermute and plenty of others in the crypto industry, including Coinbase, are saying, hey, no, we think the market's ready. We're ready to show the benefits of this technology and also the benefits it brings to consumers here. We don't think there's more of a market risk by any means. And so, we'll see what happens with the SEC and their decision making here. But overall, that battle between TradFi and crypto, it's come to DC and it's live.
Well, it's interesting too, because you look at Ken Griffey with Citadel, and then you kind of look over at what's happening with Galaxy Digital, who is embracing tokenized securities. I think we may see a division of the guard, coming out of traditional finance. Maybe this next generation of traditional finance that might fall more on Mike Novogratz and their theory of where the markets should be going. So it's going to be interesting to watch. When you look at the current status of the market structure, first of all, who are the banks that would say we're not for this? Who are the companies that would say we're not for this? What are you watching out there, from a lobbying standpoint?
Yeah, so at least when it comes to the Clarity Act or the market structure bill that's going through the Senate, we're starting to see some red lines thrown in by various industries. I'm glad you mentioned kind of the naysayers here, which are the banks. The banks said that if we're going to be moving forward with the market structure bill in the Senate, our request is that you close loopholes when it comes to the interest-bearing stablecoin. They weren't really loopholes. There were agreements back in the stablecoin bill where the community banks came to Congress and said, we're going to lose all our deposits because everyone's just going to stablecoins. And that's why we saw the prohibition on interest-bearing stablecoins from the issuers themselves. But now we're seeing the banks kind of change their, I guess you could say, tactics here and say, well, actually, we want to go a step further now. Now that Genius has signed the law, we want to close off for affiliates, brokers, and dealers, which is pretty crazy. But also, it's a pretty firm line and draw in the sand. So the banks are basically saying to Congress, hey, you're not going to get our support here for this market structure bill unless these are closed off. And again, these weren't loopholes, which is something they explicitly agreed to. So that's more the negative side here, and we've seen them be very vocal about that right now. I am sure as the market structure bill progresses, we're going to see a lot more folks and individual firms kind of join that camp. And again, there could be a chance that we see crypto firms join the camp saying, hey, we're actually opposed to market structure for XYZ reasons. So it's going to be important to watch, but at least right now, really important to watch the banks. That's their lines, the interest-bearing stablecoin prohibition. And then at least for crypto folks, the large majority we're seeing is more DeFi protections. The DeFi Education Fund did a huge letter with the industry, and that's kind of seems like to be the industry's red line. So again, and there's multiple firms that have their own positions. And I'm sure we'll see the credit unions and others weigh in. But at least right now, the two big camps of TradFi and crypto have kind of made their stakes in the ground and said, hey, this is where we're at. And now it's up to Congress saying, who's the camp that maybe will be the necessary winners here, or who are going to be the losers, but also, who are we afraid of and who are we okay maybe making a little more angry in DC. These are just the the values you have to measure in DC, and that's all happening behind the scenes right now.
Yeah, well, I think the issue here is going to be all boiling down to yield accounts that you'll be able to pull in on stablecoins, because it does start to really cause and impede a lot within what has been the known banking system. And then you're also looking at the potential for yields within ETFs, which could start to play into this as well. That'll be a big part of it, because this now gets into more of a dividend strategy that is what traditional investors kind of expect. So yeah, it could get pretty heated. Do you think we'll get a hybrid approach, or do you think it's going to fall one way or the other?
I think it's going to fall one way or the other. Again, a large part of the stablecoin stuff is already done. That's why the Genius Act is separate from market structure. So we'll see if we see some additional touching on stablecoins in the market structure bill. But that's why it was a bold ask for the banks to push that line, because again, we've kind of already done stablecoins here. But that's our prerogative, and that's the line they chose.
Interesting. I think they're going to lose this time around.
We'll see.
Beyond that, hey, listen, World Liberty Finance launched over the weekend. Was this a good thing for crypto in general? I know Wintermute is participating in this with OTC desk support. But I'm just kind of curious, when you look at what World Liberty Finance is doing, the Trump family being involved, then you have everything happening in DC right now, which is really centered around market structure. Was it bad timing, or do you think it was good timing? I'm kind of curious. What do you think? Was it a political play?
It depends the outlet you talk to, I guess, because when the day started, I think I saw Washington Post and Politico talk about how the Trump family made $5 billion off this deal. And then about 2 hours later, I saw the crypto media more talk about how it was a flop and World Liberty Financial was tanking. So I guess it depends on who you talk to and kind of like, more their agenda or angle here. When Trump's involved, that just tends what happened, unfortunately, is that there seems to be an element of a bias, one way or the other. But I will say, at least we saw with the market structure bill, we got more Democrats on that bill, despite all the Trump family involvement in crypto. So, don't get me wrong, though, it was definitely a pause for a lot of Democrats, and they had to put some additional language on conflict of interest in that version. But overall, we did see more Democrats join. So, so it remains to be seen. The Senate is a little older, a little more slower to move here, so that could be a big hurdle for some senators. But overall, when Trump's involved in something, half of people hate it, half of people love it. And that's just the reality. You got to work in politics. But upside of crypto, and upside, I guess, with me too, is that hey, we're agnostic here. This is, what's good for the markets is good for the rest of the ecosystem here. So overall, we'll see what happens on this front. But timing-wise, I will admit, probably doesn't help the headlines here. But the headlines in DC are very different than the headlines you're probably seeing in more traditional markets.
Yeah, for sure. Speaking of Democrats, Gavin Newsom, they're talking about now, I don't know if you saw this, the recent, I think it was on the Pivot podcast with Kara Swisher. He actually said, hey, I think we're going to launch a meme token. So he's taking some pages out of Trump's handbook. And of course, right now it's a pretty low percentage, but I'm just kind of curious, what would be the backlash or the support in DC if what most likely will be a presidential candidate coming in on the Democratic side, going into the crypto space? Would people look at this on a favorable position or not?
I'd say probably not. But meme coins to many people are jokes. So this is just the continuation of a joke. It's just now morphed into more politics here. Ironically, actually, one of the members who was trying to ban presidential candidates and presidents from having a meme coin was actually a Democrat from California who is pro-crypto, Sam Liccardo. He's great.
Right.
But there are some folks in California in his own delegation who have said pause here. So if it happens, so be it. This is unfortunately kind of the world of meme coins and politics is not really a favorable one, no matter what direction it goes. But this is politics now. Crypto is fully mainstream here.
Politics is crypto. Crypto is politics. It feels like
everything's computer. Yep.
Hey, my last question to you is: Trump has been teasing a potential crypto tax exemption. Is that being thrown around in DC right now at all, or is that a dead idea?
No, there's definitely some movement on crypto tax as a whole. I mean, de minimis is definitely right up there. And there's plenty of other ones like mark-to-market, like-kind exchange, and several other big tax priorities in the crypto space that unfortunately we just weren't able to get in the last big tax bill, but it was pretty understandable considering how small it was. But there is a push in Congress and from Trump himself to get another tax bill done before 2026 election. The odds are pretty low right now, but we've seen movement. Actually, House Ways and Means Committee, the committee that actually does tax policy, has had a hearing actually on plenty of these topics. Actually, it was 2 months ago. So we're seeing movement in Congress, at least here. We saw a push of Senator Lummis in the last tax bill. She was unsuccessful there. Again, but